Okay, what I thought I'd do first of all is just try and get my head around all the different forms of point of sale, because there are lots of different forms of point of sale. So what if I can ask you each to go through what your core product is the one thing that sells really, really well for you?
Well, the core product at Flexi obviously is point of sale credit.
Yep.
So they've been doing that for years.
Yep.
That's pretty much the foundation.
Yep.
And then obviously over time it's amalgamated into various different streams. But if I was to put it to one, that's the one.
What's a classic point of sale product that does well for you?
For us, it's the traditional card. But however, the laws of diminishing return on that are in. So
I'll come to that later.
Yeah.
Okay. Cool. What's a classic product? Your definition of point of sale, and where are you really seeing the sweet spot?
Yeah. So Zip is really a offering. I kind of one way to explain us is probably a mix between credit and payments.
Yeah.
So we're almost like a digital version, I think, of I guess you could call the American Express model, where we issue credit and facilitate payments in this closed loop. So we're like building that sort of captive network.
Okay, fine.
And building strong relationships with kind of consumers and partners. And we're offering effectively a digital credit card disruptor.
Right. Okay, cool. Right. Daniel?
Most people don't think of RateSetter as a point of sale provider.
Our
core business is amortizing personal loans. Or the main part of our business. But in fact, I think the world's changing quite quickly, and if you want to be in that market of providing personal loans, you actually need to be relevant at the point of sale. The key areas we're really focused on building that presence at the moment at the larger end of purchases, so probably slightly different to Zip and Flexi, so that's automotive finance.
So what would the typical price point be?
Cars we're funding are typically around $35,000.
Okay.
So, reasonably significant. But if you think of the scale of the automotive industry in Australia, it's around about $50 billion. And when you think of non-mortgage, personal debt, it's a pretty good share of that market, between a third and a half. So there's a large markets to go for. Consuming and spending habits are changing quite quickly. It's already a point of sale experience at a dealership if you're buying a car. Yeah. But that's quickly moving to an online sort of environment.
And you also do green products as well.
And we'd fund, solar panels, batteries, other environmentally friendly goods. And we typically do that at the point of sale. We have installer networks and other OEMs that we work with. So again, another example. And actually professional fees is another one. We fund real estate agency fees for Purple Bricks.
Okay.
So it's really about the consumer just finding a convenient way to pay for something.
Yeah.
They don't really care candidly about who's funding it. They just want it to be convenient.
And Jonathan, where's your sweet spot in terms of the numbers that are typically taken out of the point of sale with you? It's obviously not going to be 35,000.
Yeah, so for us, we kind of extend really from $1,000. We say up to 30, but really the curve's probably up to about $5,000. Yeah, so we're doing a lot in health services, furniture, travel, and a lot of everyday, but also some of the larger ticket items. We're not settling cash into people's bank accounts. We're effectively settling to the actual vendor. So that's a little bit of a nuanced difference there.
And Jonathan, again, what's a typical median price point for you?
Yeah, depending on which verticals we play in.
Yeah.
We're in the solar industry. Obviously, it can be quite high.
Yeah.
Typical credit would be around that 2,000 to 5,000 mark.
Yeah.
And come up. But then with our buy now, pay later services, you might be around $200.
Okay, so that gives us a real variety, actually. You've all got slightly different models, actually, very different models. I suppose the classic key issue here, I suppose, is a lot of it is ease of use, isn't it? This is a trade-off between, well, I suppose I can go out and I can pre-arrange that I'm going to buy a good and get an unsecured loan, for instance. Could do it, or maybe in addition to your mortgage. I don't know. That's what we do in Britain. Maybe you don't do it in Australia. Whereas actually with you, it's ease and access. That's the real big selling point, really, isn't it? And how do you manage that ease against the risk? There's that constant trade-off, isn't there, between I can have it now and I can have it now, but then maybe not pay you later. How do you manage that conflict? Any one of you?
Yes, I think being at that intersection of, being the distribution, being at the point of sale, in the clinic, in a retail store, looking at the dress, being able to live an experience, as you said, it's seamless, but still mitigating risk, and satifying a lot of the regulatory stuff is kind of the big challenge, which is why there's only a few players that have really tried to kind of tackle this.
Yeah. How do you do it though? That's what my question is.
Yeah. So the two parts to it were we really focused on the integration layer. So turning ourselves into a bit of a payments company allowed us to really integrate into anywhere consumers having a payment conversation. So integrate into a point of sale, practice management software, shopping cart, etc. We then also had to build a decisioning engine that could deliver, the best onboarding experience possible, satisfying first-party fraud, third-party fraud, and credit. And
I was going to just literally talk about fraud because there's sometimes you could talk about just people default because they can't afford to pay it, but fraud's obviously an issue as well. Presumably, a significant proportion of what you do is susceptible to fraud.
Well, I mean, any payments network in the world is
I realize
fraud,
that,
right? So, I don't think we're any different. There's a number of third-party systems that we would use, FraudNet, Red. Everybody goes out and looks at, especially within online digital fraud. What are the things that we can do in relation to kind of to stop that? And then you have to look at, well, then how do you maintain cleanliness within the digital wallet, right?
Yeah.
So, okay, well, you have two-factor authentication, third-party, data sets, like Larry talked about, to try to make sure that when somebody enters the wallet or comes through the wallet, that you've got a very good idea who they are, and then you've kind of weeded out the really bad fraudulent things that come through with third-party services.
Yeah.
I think it's important to distinguish between regulated products that are under the credit code and those that aren't.
Yeah.
I think it's pretty clear-cut on what you have to do with regulated products, and through that process you can really reduce fraud. I think in the unregulated products you've got more flexibility there, but I think everyone is going down the path of more checks and balances as customers go through that. And I think the great news there is really open banking and CCR. Just we're getting more data, and so that's just going to improve the experience from a customer's perspective and reduce our fraud risk and credit risk. Okay,
so you do that to reduce risk. How do you? So you make it easy, and you make it much more more seamless process, more information-rich process, because that's all you're saying. You're dragging in more information to be able to make these point-of-sale decisions. Is there? Do you think that you're at the? Do you think you can cut the point-of-sale decisions down and make it any quicker, any more seamless, or is now the development of the industry more about finding new niches? So what I'm trying to get at here is, will the industry improve by improving continuously its process and making it a more streamlined process, or is the industry really going to have to expand by moving to new areas?
Look, I think what you're seeing is it's definitely evolving, and obviously. The regulator is looking at all these models and trying to understand them.
Yeah.
I think where we're going to move to is actually a better environment. We've got more information that's actually flowing into the system, things like CCR, which is allowing operators to do more diligence on consumers at the point of sale. And I think accessing more and more data sources. I think we spoke about open banking, right? Which is, and we'll obviously get to that in a bit, but certainly being, at checkout, if we see, 12 GoPros plus express shipping, that additional bit of information can kind of help us knock out things like fraud as well.
And you'll even find some of the payment providers, like a PCF POS, or network providers, I should say, like PCF POS, Quest, are actually opening up API calls to go back into the point of sale and give that data back to us as well. So that exact scenario, somebody tried to buy 10 GoPros. No, I mean, that's just not typical behavior. You can actually see that at real time and maybe decline that transaction.
Okay, we'll come back to open banking in a second. Okay, so just diving back into looking at the whole business fundamentals. Presumably, point of sale is also an area in which very traditional financial services providers are lurking around. I know that, for instance, HSBC are lurking in this area, and arguably you guys have been around for a while as well. I'm not calling you traditional, but you're certainly not a startup, let's put it that way around. So what's your competitive advantage against, because they've clearly got the same kind of point of sale issues that you have, clearly got the same issues about minimizing fraud. They're clearly all involved in the same kind of things you are. Why are you different?
Well, for Flexi, I think, right now it's kind of going to be like maybe a product renaissance, one might call it. So the point of difference...
Product renaissance, I'm going to use that.
The point of difference is years of risk management and data, right? So we understand risk and we understand data. What we hadn't done probably, and what we're really changing now, is what does the origination path look like, and how we always make sure that we're on the consumer side. So the product roadmap for us within the next 12 months will be new products coming into market that really look at best-in-class origination and use of that data that we have, so we're giving ultimately a better consumer experience to the customer and the merchant.
Larry, you're a newer company, much newer. What's your USP over the big banking behemoths?
behemoths. Look, I think, I think JK's point around understanding the customer and really modelling that journey and working to understand what they like, what they don't like, is really important. And I think also the culture. You know, you actually need to have a product and tech culture embedded at the epicenter because, you know, I think we can all come up with the same ideas. It's how you execute, how you feed back into the process continuously. So I think, you know, a lot of those bigger businesses are sort of under new management as they try and implement transformation projects around product and culture. You know, a lot of what, you know, these guys are doing and over here as well is we're working in the cloud first with new technologies, which is allowing us to kind of move a lot quicker.
I mean, if you think about the big four banks, as I understand it, you know, they don't typically offer personal loans under $5,000. This is not they know that this is a space that they're not particularly good at.
Do they offer car loans?
Sorry?
Do they offer car loans, though?
Not under $5,000 typically.
Okay.
Yeah.
So they might offer it for 35.
They'll offer it for 35. Yeah, that's right.
Yeah, so what's your difference against them and there then?
I mean, I think, they're less focused and on some of these areas. If you're thinking about the big four, I think they've got bigger fish to fry. If you think about a large consumer finance business that's about to IPO, I think the advantage that businesses like ours is like Larry said, we have a culture where we just want to move quickly and we really want to deliver something for the customer and therefore the commercial partner. And if you look at the rise of the Afterpays of this world and the Zip and so on, you know, a lot of the incumbents have been quite slow to replicate those models, which have clearly attracted a lot of customers. So speed is a huge part of it. And why have the merchants signed up with these businesses? Well, they offer really good value. And I think sometimes the newer businesses can actually deliver better value than the traditional incumbents.
We've already mentioned open banking, and obviously comprehensive credit reporting is coming as well. I mean, can you give me one practical example each about how, with the rise of open banking and comprehensive credit reporting, it's going to make a really profound difference to your business model?
I mean, you know, it's going to be absolutely transformative, I think, for our business.
So give me an example. How would it actually work?
I mean, you're from the UK. You know how lending works in the UK. When one wants to underwrite a loan, there's a lot of information you can get from a bureau.
Yeah.
We don't have a huge, Equifax. We don't have we don't have a huge amount of information in our data here. It's a negative data set. So open banking is going to transform that. We'll have proper information to actually underwrite loans. So that means our operations can be more efficient. We can underwrite more quickly. That means the customer gets a more rapid approval for their finance.
And by more rapid, how more? That's not the right way of saying it. How much quicker? How more rapid?
Well, I mean, if you really look back at what's sort of happened in Australia is we introduced responsible lending, but we didn't really provide the data for businesses that are not banks to actually be responsible in their underwriting. So actually, whilst it's an absolute flaws, and so whilst we're fintechs, you know, on the lending side, maybe less on some point of finance sales side, you've got one arm tied behind your back, and open banking is actually going to free up your arms. You're able to compete on a level playing field. You know, so I think it's going to be transformative. And then there's all the buzz around it that is going to encourage customers to look outside their sort of core banking relationship.
Larry Jonathon, well, again, just give me practical examples of how open banking is going to help and comprehensive credit reporting.
Yeah, so we spoke about new to bank or new to credit.
Yeah.
You know, for us, when we started out, we introduced the banking step as a core part of that onboarding experience.
Yep.
And what we found is, a lot of millennials this might be their first interaction with credit. So a bureau file is not really going to give you a lot of information on that individual. So accessing that information will obviously mean in a much more secure manner, I think will enable, you know, a better customer experience and better outcomes. I think for us, we're already doing a lot of the analysis and algorithms on the data set, so it's more just creating a much more secure environment in the public eye. And the other thing I like about it is once you've got the read APIs, write APIs will be coming down the corner as well.
Yeah. Justin?
The same as both, because obviously, it's going to allow you to make better decisions. But if you think downstream one step further, so just regurgitate what they've said, think about the ability to repay back within the digital wallet. Today, we're still stuck in a system, even at Zip or everywhere else we go, where we still put 16 digits, a piece of plastic within our digital wallet to make our repayments, right? So the ability to actually say, well, no, wait a second, I'd like to use my pay ID, which could be my mobile phone number or my email address, to actually say, no, link directly to my bank account, and when you can then transact that way could completely change the way that we look at debit and credit within repayments today, because it's a bit clunky to do direct pay.
And we're going to take some questions from the floor in a second, but just one last question as well. Are we going to see a kind of bifurcation between sort of older customers like me over the age of 40 who are just going to stick with the big banks because, you know, it's the world we understood, and then the younger millennials who, as you said, might not have credit in the traditional sense of the word. And we're going to see a bifurcation between those two groups. Do you think the millennials are sort of much more in favour of point of sale? Although I would have thought actually, by and large, people are likely to be buying $35,000 cars and nice solar panels and that kind of stuff, and get the head around Amex are more likely to be in my generation. How's it going to play out generationally?
Why did you choose your bank?
Because we didn't have a choice.
Exactly. There is choice now, right?
Yeah.
So what's going to happen? They're going to stick with whatever is giving them choice and giving them a good benefit. If any of our companies start to do the wrong thing by our customers and they fall out of favor with us, they will leave. So I don't think the difference is you might have to stick with your bank, but the way that our products work and the way they get originated, as long as you're doing right by your customer and it's adding value, they'll stay with you, but they might end up having multiple.
Yeah, they could have all three.
All three of us.
And at that point, is this really just a perfect millennial sell?
Open banking? No, I think...
Or no, actually, even your product.
Is it a millennial sell? Well, look, 65% of our consumers are under the age of 35.
Oh, really?
But 35% are above. You know, we've got...
Is that asset weighted or is that asset weighted or just numbers?
Customer active accounts.
Customer active accounts.
So about 600,000 active accounts. So,
okay.
But Thermomix is one of our great partners, and that's a slightly older demographic. So I think if you are a technology adopter and you also believe in the brand, and and we're able to deliver value for you, surfacing insights from all your transactional data, then I think really it might, early adoption tends to be in the lower segment, but we're seeing the rise across the board.
I'm very taken by your idea as well. A lot of millennials, they get talked about as this group. They're a heterodox group. They don't all think the same way. But many of them don't have credit cards. They just don't have credit cards because they just don't have debit cards, but don't have credit cards. I'm still of the generation where I go looking on websites for the best interest-free credit card deals. We have them, and low interest rate deals with credit cards. But actually, a lot of them don't even have a credit card. And that's potentially a market for you.
I mean, you just finished telling me outside that actually you don't bank with a traditional bank anymore. So, I think that provides the answer that actually...
Cat's out the bag.
I think it really depends on the product. And we find with our point-of-sale finance, we've got a skew towards people over 40, and that's just because we're in the areas where...
I was about that. It's what your product set.
Absolutely.
Okay, I've got some really good questions here. My eyesight's so bad that I'm going to have to try and read them. So does the panel consider Afterpay's buy now, pay later model as finance? I warned that this might be quite a controversial question. Who would like to answer that one first?
Daniel.
It's absolutely finance. Nick's not here. I think it's hard to dispute that it's not finance, because I think they've already gone down the path of getting relevant licenses from the regulator. Obviously, the regulator's looking at that, this area is being within its remit.
What's your sense? I mean,
I don't think that's a bad thing. I don't think there's a problem with it being
a
finance product. I don't know why you'd try to hide it being a finance product. I mean, it's obviously very relevant to retail, but actually I think these businesses are going to diversify quite quickly out of just the core retail segment, and therefore they'll probably at some stage be claiming it's as much finance as retail.
Yeah. Okay, next question. Oh, gosh, I moved around again. Yes, I will consider getting glasses. Okay, what point of sale lending must be one of the hardest areas to which lend responsibly. That's sort of lurking behind one of my earlier questions. The temptation with still limited information sets and a merchant, a partner who's quite clearly keen to push a product, is you just get it out the door. So, I mean, let's go back to that question about responsible lending. How do you really make sure that you are responsible lending on these quick turnarounds? And I know you've mentioned them already, but let's just delve a little bit deeper.
So look, I mean, we really started our business disrupting the kind of credit card, high interest, lack of flexibility, and hard sign-ups. So if you look at the Zip model, we started out with responsibility and transparency at the epicenter. So every single customer applicant that comes through, we ID and credit check.
Right.
We introduced the banking step early on. Our loss rates of 2.5%, for example, would be in line with where you're seeing point of sale vendors. Some of the others obviously slightly higher.
And
so
can I just quiz on the 2.5%? That's interesting. Has that stayed fairly constant over time, or has it improved?
no, it's we target a provision of 3%.
Yeah.
And absolutely what you're seeing with our book is actually maturing. So the seasoning is coming through. You know, that's sort of where we are today, but it's always a balance between, you know, approvals, losses, and kind of revenue. But that's sort of where we're targeting in the short term.
Your business has been around for quite a few years in this area. Again, to your point, how do you minimise losses, and what are your kind of loss rates at the moment?
Probably about a little bit more than Larry's because we've been around a little bit longer, but yeah, you know, short of 4% would be typical. But the same thing is with responsible lending. You know, you've got just the regulation stipulates that we ask certain questions.
Yeah.
It's how fast we understand what questions we're asking and sit back through our data points and how well you can give a question back or an answer back. And I would say, well, just because you can do it in 5 seconds doesn't mean it wasn't more thorough than calling a call center.
That's fair point.
So
Yep.
it's just that you're able to read the data faster and make a proper decision.
And just actually related to that, a point of sale online application. Do you identify if your finance product is not suitable or unsuitable for the customer? How quickly do you do this? How do you do this? That's the one at the bottom.
We probably wouldn't have let the vendor come on to begin with. We underwrite our vendors before they would come on.
Yeah, I think that's okay. So one very last question. What's the one growth area for each of you? Where do you foresee, maybe you're not doing as much at the moment, but you're looking for it in the future. What's the one area of growth for you?
Can I give two?
Go
No,
on.
I mean, I'd go back to automotive finance and
You still think that's?
And absolutely, I think it's an absolutely enormous market. We're seeing a lot of traditional lenders move out of that space at the moment. So we're really just ramping that up now, and so we're very excited about growth ahead.
Larry, any particular growth areas you're into?
Yeah, I think for us, you know, we started with the bigger ticket purchases, furniture, travel, and moved down to more, you know, on sites like Kogan and Catch. But if we want to be a true credit card disruptor, we have to add the everyday category and really get that kind of repeat monthly transacting.
What do you mean by the everyday category?
You know, coffee, fuel, groceries.
Oh, okay.
So if we kind of really want to be a disruptor to the credit card, be ubiquitous, that's going to be a big focus for us as well.
That's interesting.
So it's more the payments lens to kind of drive.
Yeah. No,
So I look at the world in closed loop and open loop.
Yeah.
So I look at our closed loop system and 100% everyday spend, get into everyday spend market. Look about usability of the wallet. So it's not something you think about using once a month. It's something you think about using 2 or 3 times a day. Okay. And then on the open loop side, is around creating more digital experiences and getting away from just our card-based platform that we're at today and expanding that open loop for us.
So just that's a really interesting vision. The everyday items. So it could be, you know, your fuel, could be your supermarket shopping, could be buying clothes online. That's the kind of market you're interested in.
Yeah, and I think that's what the credit card's doing. The credit card's giving you 25 days after statement. So I think we're creating products that are offering much better terms than the credit card. But to be a true competitor, you've got to get into those categories.
Yeah.
Or plug into an open loop.
Okay, cool. We've got a big red light flashing at us. Okay, thank you very much. It's an excellent panel. Thank you, guys.
Cheers. Thanks a lot.